JB Chemicals is the other stock on our radar. Mr. Nikhil Chopra, the CEO and whole-time director, joins us on the show for JB Pharma. Thanks so much for making time and speaking with us. Nikhil, good to have you on the show. Let's begin by discussing your earnings. First up, overall, what kind of scenario do you see on the ground with respect to the kind of demand scenario which is building up and the orders which we are getting?
First of all, good morning and thank you for having me on the show. It has been a fair run for JB for 9 months of the year, if I have to share, and the demand has been also good. Overall, if I have more in the chronic part of the business, where we have been excelling, and within chronic part of the business, our forte remains in the field of cardiology. So we have been working to raise the demand, not only by going in the clinic of doctor, but also looking at how do you reduce the burden of disease, how do you overall look at the entire ecosystem, drive better adherence for the patients who are taking the medicines. So it's a holistic approach that we are putting at JB in any therapeutic segments that we get into. First 9 months of the year, we have been growing at 10%. EBITDA and profits have been growing at 20%. It has been a fair run. And majorly the contribution is coming from India business, which is contributing 53% to the revenue. We declared our results, 845 crores for Q3. The revenue grew at 7%. And our EBITDA was close to 235 crore, which grew at 22% plus. That is where we stand. Equally, international business is also doing fairly well. 9 months of the year, we have been growing at 7%. Our emerging market, that is ROW market formulation business and CDMO business, has been performing well, and the demand continues to be there.
Nikhil, we can see that what a strong growth you're posting in your India business, and that's more than 50% of your revenue. So barely any growth in export is also getting made up for. But I want to understand profitability. Where is the 27% margin coming from? And where would you like it to sustain from here on?
The highlight for this quarter is the gross margin that we could score, which was 67% plus. It has been put in place in a designed way, if I have to share. A lot of efforts have been put in terms of how do we improve the mix of the business, particularly in India, where the chronic part of the business is overall improving its contribution. There is a robust efficiency program that we run in the company, where we look at productivity enhancement across the company, whether it is for our employees on the field in terms of productivity, whether it is at our manufacturing sites, whether it is better vendor management, and equally tilting more towards the entire CDMO part of the business, which we do outside India. There also we have better margins and better volumes, which is overall helping us. And last but not the least is the haircut that we have taken in our South Africa business, where we are now less participating in tender market, where the margins were thin. So that is overall also helping us in terms of where we are from gross margins and EBITDA margins.
Right. Morning, Nikhil. Wanted to also get in a sense as to what the outlook is in terms of your ophthalmology segment, because I believe that also holds great promise down the line. In terms of contribution, how are you looking at that and what kind of opportunities do you foresee?
So it has been a good addition to the portfolio, which we could do. And very early for me to share about what we are trying to do in the world of ophthalmology, but it's a licensing income for distribution and marketing agreement with Novartis, where we are working closely with them. And we have acquired 10 brands, and out of those 10 brands, 5 brands are number one in their category. We are majorly into glaucoma, NSAIDs, anti-allergic portfolio. This is a 200 crore portfolio, and the way next 3 months we are using in terms of getting to know more in the world of ophthalmology, probably I'll be able to throw more color in post Q4 results. But it's an exciting journey, and ophthalmology overall as a segment is outscoring the IPM market. So we are once again in lieu with our entire hypothesis of getting into the growth market. This ophthalmology also helps us in terms of taking JB's journey ahead.
And we'll love to hear more about it after Q4, as you pointed out. But you're pretty much on track for your guidance for FY24. But of course, the focus now shifts to FY25. Do you think 12 to 14% growth with a 16 to 18% EBITDA growth is a bit conservative?
If you look at overall the way JB has been performing, if you look at the way we see overall, the way India market growing, India market should grow. Overall, I'm talking of Indian pharma market. It should grow at around 10%. We should be growing at around 2 to 300 bips better than the market. And the way geopolitical issues are there overall happening in the international markets, we have kept our guidance of international market growing at double digit, that is around 10 to 12%. That is how we have guided 12 to 14% top line growth and 16 to 18% EBITDA growth, which will overall help us to improve our rankings, to improve our prescription share, and to serve more and more number of patients. And the journey at JB is only upwards and onwards.
Yes, Nikhil, great chatting. Thanks so much for your time this morning. That's the journey of JB, which Nikhil is indicating towards the smile is upwards and onwards. So you can understand where the stock could be heading in the long term.